Good evening everybody, welcome back to a Chart Nerd technical analysis video. Today we will be discussing DMTR, the ticker is DMTR, against the USDT on the monthly time frame. So a very zoomed out perspective today. Now let me explain why. I think just keeping a cool head and really zooming out here, it helps me relax, guys, I'll be honest, because I think in my previous video I was looking for a retest of this local high where we had a level of resistance back in May. We pulled back for a higher level of support and a higher low to this all-time low in January. So we held a higher level of support and we eventually in March of this year broke out of this key level of resistance. And all that's happened since this breakout in March is we've ran up and retest this monthly 20 EMA that you can imagine if this line was to carry on back up to these previous dates. This is the first time since losing this EMA that we've ran into it on a larger time frame. So this first point of contact isn't unusual to expect resistance. Now for the last 5 months it's been over a 70% correction, and it does feel quite daunting, but we did go through something very similar from April of 23 back into October of 23. We had an 85% correction. Now fast forward to where we are now, you'll look that we've had from March of 24 all the way up until August so far, we've had around a 78% correction. So if we was to get something like an 83 to 85% correction, we'd be looking at retracing back down to around 0.04. So if you had a correction very similar to this previous one to a higher level of support, then 0.04 is something to look out for. Now another reason why this 0.04 range could act as support is because if we lose this current neckline of previous resistance that we are holding at the moment, if we lose this neckline, right, coming from this high back down to this low that we've pumped up from, you'll notice that 0.04 is the 0618. So if we do come back for a similar correction of around 80 to 85%, then the 0618 is a key area to look out for as support. So it's quite simple, guys. At the moment, we've back tested this previous high and we're holding it currently. So 0.06 is the range, the sort of price range we need to hold to validate this sort of ascending triangle where we've got a low, you've got a higher low, you've broken out of this resistance, we melted through it in March, we've ran back up to the 20 EMA on the monthly, and we're pulling back in this bullish sort of channel looking for a key level of support. So right now it's all about holding, guys, this 050 and 0618, this golden ratio. And we could just be doing something very similarly to what we did here in the past, where we had this sort of 5 to 6 months of falling channel between support and resistance, eventually found a key level of support before breaking out and putting a new high. Right now we've done the same. We're pulling back for the past 4 to 5 months in this falling channel, an identical pattern to the previous correction, looking for a key level of support. So I think it's somewhere around here, guys. I really do think 0.06 to 0.04, sorry, is where we find the next sort of base, and we do hopefully get that candle to start retracing back up to this 26 high that we're falling from and getting back above this monthly 20 EMA. So when you zoom out, you really do get a bit of a clearer vision and a clearer scope or sense of awareness in the charts. It's literally waves within waves, and breaking out, coming back to support and resistance, or breaking support and running into resistance for continuations to the downside. Right now our situation is still bullish and structure has not been lost, even though we are down 70% since this high, this local high in March. We've got this low, we've got a high, we've got a higher low, we've got a higher high. Right now, if we can come back somewhere in this 0.04 to 06 range and build the next higher low, then the next point just validates coming into a higher high. And all we're doing is slowly but surely climbing up these stairs here and marching our way back to these local previous all-time highs that we've fallen from in this really sharp downtrend. So right now everything is going okay, as much as it feels like it doesn't. And the only way to negate our theory of putting in a higher low here is and to lose structure is by losing this local low of October of 23. So right now everything is still okay until it's not. And I just wanted to reassure that to you guys. So at the moment we've got this sort of flag, as I said, and we're holding this previous level of resistance. We're currently holding it as support right now on a knife edge, and we need to see the monthly close out above this level of support to negate that downside to 0.04. Okay, so if we hold 0.06, fantastic. Break resistance, amazing. It'd be lovely to see that over the coming weeks. But right now, I think we are literally caught between a rock and a hard place, trying to find support on this previous high and between 0.04, which is also the same sort of size correction as we previously had in 2023. So right now, for me, if we are in this sort of bull flag, we would have a breakout target from this local high to the flagpole of the previous low. And if we do sort of break out from this level, we could be looking to retrace up to around 96 cents. And is there any sort of confluence if we do come back to say 0.04, guys, and start retracing back to the local high that we've fallen from at 25 cents? You'll notice that this sort of bullish flag that we potentially could be in could take us up towards 75 cents. I think 75 cents at the 1618 would be a next impulsive target for me if we do find support at the 0.06 to 0.04 level. So from current price, if we've bottomed out now, for example, this would be a 10x. And if we do in fact retrace any deeper and say come back to 0.04, for example, for a low, then you're looking at a 15x. So do with that information what you must. Spit it out. Gosh, blimey. I find it very hard to sometimes try and stay professional in my videos, I'll be honest. But I love it. I really do love charting. So that is the key takeaway for me right now. We are, yes, in a strong downtrend right now for the past 5 months, but we are coming back in a bullish pattern on the macro. Zoom out, guys. Look at the monthly time frames. Key levels of support right now are 0.06. Lose that. We're looking for 0.04. which does also tie up with these previous highs that were resistance back in November through to February of 2023 to 24. So we did have 4 to 5 months of resistance around this area at 0.04 that was initially only broken in one huge month in March. So we could literally just be coming back down to retest this previous level of resistance and meet it as support, and that is the 0.04 range. So yes, I hope you enjoyed the content, guys. From Chart Nerd TA, take care. Peace out.